Good morning, welcome to Trade Live with IG. Bit of a false start there. Did anybody spot it? Director has a trigger figure this morning, that's right. Good morning, everybody, welcome. It's a big day. We have a huge day. Not only do we have Vodafone results out, not only do we have an interview with the CEO of Smarter Web Company that I was talking about yesterday, we've also got Greg's results.
It's just all your Christmases come at once, isn't it, really?
It literally, all the top stocks in one day. Right, let's have a look at what else is coming up on today's show. We've got the one, the only, thank God, Chris Beecham with us until 9:35, at which point Matt Arbour will do the switcheroos and come in to update us what's going on live on the trade desk. Yes, he's back. Piers Buckworth is back with us at 9 a.m. 9:20, we got Tech Focus. Andrew's going to speak to Piers on some of his ideas. And then from 9:30, I'm going to do a teach-in on what the whole idea behind MicroStrategy is, right? What has MicroStrategy, how have they managed to get to 100 billion market cap? I'm going to run through that, and then that leads us into 9:40 when I have a CEO of Smarter Web Company, the UK's version of MicroStrategy. Chris Beecham, what is going on?
Generally, or?
Well, yeah, first of all, in your life, sir.
Oh, well, busy times. Markets have calmed down quite a bit, though, haven't they, really? I think from a work perspective, without tariff announcements every other day, things just aren't quite what they were.
True.
Really. So,
he's busy saving the world now, isn't he?
Yes. Well.
Or moonwalking out of peace talks.
Well, yes, very much you're on your own, everybody. In fact, the Vatican is now...
yeah, it's the Pope's problem.
He's handed it over to the Pope, which is, if there's anyone guaranteed for good at this, it's the Pope. So let's leave him to it, really. Certainly the call hasn't gone the way the Europeans wanted it to, I don't think. No. But there we go.
Right, let's go into overnight action and look at this Japanese bond market. So, Japanese bonds having, some are calling it a collapse of the Japanese bond market, some are calling it the worst auction.
Is it the 40 years, I get the numbers right around, the 40-year bond yield is at its highest level in 30 years, 3.3%. And of course, there's so much focus on US debt situation, but if you look at the debt to GDP ratio, the US is down here and the Japanese are right up here.
Yeah.
Which hasn't mattered in decades because so much of it is domestically held. With the US, there's that discussion of, the Japanese selling bonds, the Chinese selling bonds. With Japan, it's all domestically held, isn't it, really?
Yeah.
So it's not that pressure. But even so, if your borrowing costs can continue to climb, that's not great, is it, really, from a government situation?
And what's happened recently, I'll go through the news I had this morning. So the worst auction since 1987 for Japanese bonds. The global focus, obviously, on the US with the Moody's downgrade. But suddenly we've had a catastrophic JGB auction. So the bid to cover collapsed to 2.5 from 2.96 last month. That's the lowest since 2012. And the tail surged to 1.14. That was 0.34 in April. So why is demand evaporating for Japan?
Well, it's interesting. The PM said the financial conditions for Japan were worse than Greece. Worse than Greece, which for those of us who remember the still have PTSD from the Eurozone crisis, that's not the kind of thing you want to hear. Partly because the Bank of Japan is just stepping back, isn't it? It's been this massive buyer of bonds.
Right.
Yield curve, you call it yield suppression, yield curve control, just to keep a lid on these yields. And as the central bank eases back, and ideally other people step into the gap, because Japan, very good credit risk, hasn't defaulted, very sensible government, unlike some we could think of, is a fairly stable place to park your money. But clearly investors just aren't filling that gap. So maybe it's just a slight dislocation for the time being in the market, but because nobody stepped up to fill the gap. But if it carries on, that's going to continue to be a problem. And I'd be interested. It would be typically ironic of markets to, while we're all focusing on the US debt situation, for the next crisis to actually come barreling in from left field, right field. Sorry for those watching at home.
East field.
Yes, over there. Exit pursued by a bear. From Japan. This would be entirely
typical,
really, of markets. So we're looking at one thing and miss the elephant in the room.
Especially on a evening where Jamie Dimon said that markets have rebounded and they're completely getting ahead of themselves because they haven't seen the effect of tariffs yet. An extraordinary amount of complacency from the mouth of Jamie Dimon.
Yeah. I don't think he's wrong. It doesn't make sense to disagree with Jamie Dimon because the man knows his stuff and he knows, he's done very well at purchasing JP Morgan shares at the right time as well. He? But yes, I think there's mulling over this past couple of weeks. We've come so far, so fast in markets. Even if you thought that things will be okay, have we come too far, too fast? How many points are we up on US markets in the past week or so? What is it?
Just in a week.
Look at the Dow. We're trading above 42,700. We were 41,500 last Monday when the tariff truce came in, which is only a truce, don't forget.
Yeah.
Maybe they are pricing in too much optimism. You don't have to be a super bear to say maybe everyone's just got a little bit ahead of themselves. That's not to say this can't keep going, because one thing we know is that markets overcorrect on the downside and on the upside.
No, absolutely.
And if you've got, as the data shows, people piled out of stocks in April. And if the institutions are still massively underweight and they're chasing performance, if you're a fund manager, you've seen the way US markets have come back, you think, I need to be in that because I'm missing out my performance.
Yeah.
There's some room for that to go a bit further, really.
There's certainly that momentum of the chase. And
the longer it goes on, the more you get sucked in as well.
Yeah. And it doesn't usually end well.
No, it's certainly for the latecomers anyway.
That's it. Yeah, if you bought at 5,500 and you add at 57, you add at 59, then that's fine. You got a nice blended average. But if you're just starting to buy now, then
you are and that's always the problem, isn't it? I don't want to buy now when it was down 25%, whatever it was, because it might go further, and then it's gone up.
Yeah.
How much is it up in percentage terms from 5,000? 900 points.
4,800.
Well, exactly. So, but it's too late now. Well, not too late, but the risk is that maybe as we've been saying, as you get into June and when the May inflation data starts to come through, that could be your key one, because that's what, the 11th of June, I think it is.
Yeah, that's Jamie Dimon's point, is that the stuff's slowing down. It's just not in the numbers yet.
Yeah, it's not. It's in the soft data, and the hard data's carried on, but because it's backward looking to an extent. Now, you might argue that the tax cut bill that goes through, the fact that the administration maybe, and I know this was your point earlier in the year about how the administration wants to reverse this trajectory of US debt, and so they will cut spending. But that you can argue maybe now with the tariff volatility and everything, they've looked over the precipice and they've realised this is quite a hard job. I don't think we can be bothered with this.
Yeah, it leads us perfectly into our first look at the Financial Times this morning. And that is, of course, the big, beautiful tax bill.
It's actually called the big, beautiful tax bill, isn't it?
Yes. Right, we are at the point of seeing this potentially pass, which could be incredibly scary. Ray Dalio describes it as it's like being on a boat heading for the rocks or the iceberg and having those running the ship arguing over which way to turn. I don't care which way they turn. They can turn left or right. I just care that they get the ship back on course, and that's not what is happening here. This tax bill, if it goes through as it is, will add trillions to the US debt. Even we get a negative comment from Eddie Yardeni, which normally he's the bull, and he says a term he coined back in the 1980s. The bond vigilantes have saddled up and they are ready to make their move. And that is the headline of the title of today's show. And that's why we're talking about bond vigilantes.
Okay.
Because if Eddie Ardeni's talking about, that on the horizon.
Because he's an optimist, and he's not a rampant, bull. Regardless of whatever happens, he's prepared to call it as he sees it. So it's interesting that he says it. Now, Besant's point over the weekend was, we're going to grow the economy, so that the increase in debt won't matter, because the economy will help to pay off a lot of that.
Yeah.
So that's his view, and I think that shows you they've changed from saying we're going to cut spending, but we said we're going to grow the economy instead, because they've realised that if you tariff everything up the wazoo and then you cut spending, you're going to engineer a recession.
Yeah, I remember a wonderful female prime minister of this country arguing that over the 30 days she was in office.
Yes, exactly.
Yeah, don't worry about the debt, because we're going to grow the economy so quick.
Well, yes, you can see some of the parallels. I suspect that even I would give Besant more credit than I would.
Oh no, absolutely.
Sorry, Truss and Kwasi Kwarteng.
Yeah,
really. But yes, they're slightly uncomfortable parallels.
Right, so that's our macro look. Let's get more into the micro then. Let's look at these big, beautiful Vodafone results. So the important, forget the numbers that are in the past. Let's look at that outlook. Right, they have managed to achieve in line for their full year 25, right, with a free cash flow of 2.5 billion euro. Now they go ahead and say, yes, the current macroeconomic climate presents significant uncertainties, obviously on trade, which may impact our financial performance. However, based on the current prevailing assessment of the macro outlook, adjusted EBITDA is expected to be 11 to 11.3 billion euro. With adjusted free cash flow of 2.6 to 2.8, they also reinstate, they announce a new buyback of another 2 billion euro, which must be 10% of market cap. And they look all right. They look all right. I was worried, I must say, when we saw the CFO resign, then I was concerned. But we're looking at 1% pre-market there is the guidance for Vodafone. So
it's not bad, is it? It looks like this turnaround is beginning to come through. Wow. So you can be a happy camper with these.
Relieved. I'm very relieved. Because so that it's Vodafone's a tricky one, because there's just the disbelief in what it can do, right? I mean, people have got more belief in us reaching 750 subscribers this week than they do
poor old Vodafone.
in Vodafone. I think we're going to hit 700 today. What are we at? We're at 693 people. If there's anybody out there who is not subscribed to the channel at the moment, please hit that subscribe button, hit the like button. We are saying a very good morning to some new people in the chat this morning. We've got Raul. I think that's Raul Paul. Saying good morning to us. Shrimp Fred, good morning. Bigger B at Steve Davies with us. Jesse 14. Last week, Chris Beecham posted a chart on IG showing the amount of retail investors buying compared to institutions selling. Wondering your thoughts on that. Well, the retails have won, haven't they?
Yeah. And this is the thing, isn't it? Are they right? There's always the, they don't know what they're doing. They're always late to the party. But they called this one.
Yeah.
Very, very well.
Very well. The whole idea of DCA has come out of this one beautifully. However, had you sold at 6,000, 5,900, 5,800, taking your money out and put it back in at 5,000, then you'd have 20% more shares.
Yes, if you timed it perfectly, you'd have done very well. But then if I had perfect time, I wouldn't be sitting here talking to you this morning.
Yes, you would.
Would I? I probably would anyway.
I'd come in just for the morning bants. Not an employee here.
So there's a strong argument. The people who sat there and just carried on investing, ignoring the tariffs, ignore the headlines.
Yeah, but what do they do now? That's the thing.
Well, if you're Horizon, if you're an investor and say you're 30. You've got decades ahead of us, a bit like you, sadly. You just keep doing it. And okay, there's going to be tough moments on the way. If there's a recession coming through in the next year, which isn't entirely implausible, then it will be grim. But you just have to keep going. That's the whole point of this. The whole point with any trading strategies, you have to keep doing these things over and over again. And if you stop DCAing all the way through this, you're going to miss some really, really good prices at the lows.
That is a good little teaser for what we're going to be talking about at 9:30, right? Having a strategy and following it, and whether that strategy, sometimes obviously you've seen the likes of Bitcoin come off.
Exactly.
You saw MicroStrategy share price fall, but they've continued on.
Yes.
Bitcoin all-time highs, and
DCA is not a perfect strategy, but if you allow the volatility to sort of scare you out when it's going down, and it takes time to build that confidence back up again, then you're going to miss a lot of the falls. But you're going to miss a lot of the gains as well. What you often see is the biggest one-day losses and big one-day gains occur right next to each other. So you often just miss out on those days.
Yeah, I think a stat I would prefer would be that you don't put in every month and you wait until that volatility spike. I mean, vol hit 40.
Yeah, so that would be a reasonable one as well.
And then you take 6 months of cash and
then you put it to work. Exactly. So you could, but not everybody wants that. Because what if you forget that time? Oh, that was too much.
I know. Imagine having to put some work in to have £1 million by the time you retire.
Well,
imagine have to actually do an hour's work every week.
People have other things to do,
Such a lazy attitude. This DCA every single month and not paying attention to your pension pot that is just as important as your job.
Yes, but I think you have to remember we're still dealing with human beings here, and that's the key. Because you look at any strategy, you can sort of data mine to your heart's content. We were looking at one yesterday where you buy the every end of every year you buy the 10 worst performers on the FTSE 350, and you buy them on the 31st of December, and you sell them at the end of March. And if you back test this, it massively outperforms the 350. Absolutely just knocks it out of the park. But you've got to do it every year. And if you have one where you were ill on the 1st of January, whatever, you miss it, there's the strategy gone. So that's the problem with this stuff. You just have to keep doing whatever if it's DCA, if it's your strategy, modified, wait for the falls. Keep doing it.
Excellent. Right, we'll also take a look at other numbers this morning and upgrades and downgrades. We've got Kingfisher has been cut to underweight at Barclays with a price target of £2.80. So those of you in the B&Q it, then may see a bit of weakness this morning. GlaxoSmithKline, there is cancer treatment combinations approved in Japan. Centrica are looking at 1% on the sale of their Cygnus gas field to Ithaca Energy.
Greg's up 2%.
Go on, tell us about Greg's.
Total sales up 7.4% for the first 20 weeks of the year, and like-for-likes also speeding up as well. So what they call same-store sales, if you're not familiar with this like-for-like metric, which is the store that was open last year, you measure them to get a sort of consistent view. Full year view unchanged, a very solid performance there from Greg's, and expected to open 2% higher, so baking in some fairly decent numbers.
He's done it. He's got it in. Closed last night at 1999, my year of birth.
And if you believe that, no.
So yeah, there we are. There's the famous for its sausage rolls, and the pizzas at lunchtime though are disgusting. Rose 2.9% in the first 20 weeks of the year.
Join us for more food tips.
Yeah, exactly. Greg's, which has more stores than McDonald's in the UK.
That's a very good. I like that stat. That's going to get trotted out ad nauseum.
That's a good pub quiz, actually.
Yeah. You might make some money making people bet off that. So if you compare Greg's and Vodafone in the last 10 years, Vodafone has delivered you a total annualized return, including the dividend, of minus 4.5%, whereas Greg's has given you 14.3%.
What a great time to change. Start DCing into Vodafone.
I see, okay.
Right, good. So what comments have we got? Two-tier Kier. I love that. Somebody's called themselves two-tier Kier on the chat. What happened to the Moody's downgrade negative impact on markets? That's right. what happened to it? It evaporated. What people are watching is, of course, the 30-year yields. Let me get those up for you now. So quite an interesting spread of rates this morning. So here we are. Remembering we were at 5% this time yesterday. This was the key to the market. So watching that drop from over 5% down to 4.92.
What's the scary number? No scary music. Where's the gallery this morning?
I don't know if we've got a scary one, have we?
We've got a scary. Where's the
Axel's pretty scary.
Oh yeah.
And then just to look around though at the comparison of all 10-year yields, right? You see here 4.46 for the US, the UK 4.66. And we're going on to Germany. You're right. 2.58 harsh. 2.58 for Germany and 3.26 for France. So UK is the highest. Why are UK rates so much higher than Europe, Chris, traditionally?
Have you got an answer? I think off the top of my head. It's still a hangover.
I guess the Germans, is it?
Yeah,
so disciplined.
Pushing it down, exactly. The fiscal discipline from Germany and the idea that the debt to GDP position is much better than the UK. I think
81% debt to GDP is the average euro.
Okay, so it's much better on that front. Of course, the RBA cut rates overnight as well, for 25 basis points, and a 50 basis point was discussed as well. So again, it's your Powell. You see everybody else cutting rates. You're going to feel nervous. That phone's going to ring at some point, isn't it?
Hey. Right, let's look at the Aussie dollar. Is there a nickname for the Aussie dollar?
The Aussie, unfortunately, it's not the most.
Is it just the Aussie?
Yeah, it's not the best nickname in the world, is it really?
All right, that's the daily chart there. And then you go by the 2 minutes. It has actually weakened, as it should do.
Warning, the unemployment rate might climb to nearly 6% in a trade war scenario if the tariffs get reimposed. But it's still expecting inflation to decline to around 2% by the end of 2026.
Okay.
Fairly dovish cut, but then the data wasn't really very positive, so you understand why they're continuing so this sort of weighs on it really, I think, particularly. So watch that Aussie dollar come under further pressure.
Yeah. Who's next in rate decisions? We've had Bank of England, we've had Australia, we've obviously had the Fed.
Mm-hmm. Bank of Japan, where are they?
Yeah.
That'll be interesting.
Have a quick look at that. Ashton saying bought Greg's at £17.70. Well done. What a fantastic purchase. That's one of the best. We saw Monkey Man buy Vodafone at 63, but Ashton buying Greg's at 17.70, almost as impressive, I think.
Very good. And we should talk about the DAX crossing 24,000 for the first time in the futures overnight.
Uh-oh.
Triumphant march of gains there. This is the flows out of the US as well. People are just saying we don't want to be so heavily weighted to the US. The fund manager survey is still saying we're underweight US relative to history. Yeah. Where are they going? Partly Europe. So very impressive performance.
I did spoke to one of my friends in investments on Friday, and he's seeing more and more of it. There's a couple of places that have got mandates to move money out of the US into Europe. So it is happening, and it's continuing to happen, as the futures there are evidence of. So FTSE up 37 basis points, 8,700, Chris Beecham. Triumphant, yeah. The Germans up 26 basis points, and we've got vol back below 20. That is healthy. A low, the S&P 500, 5,400, down 30 basis points. We're going to take a quick 2 minutes, just because Boise's joined us. So we're all going to take a break, and he can think about why he's late this morning. We'll see you in 2.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction. Whether prices are rising, falling, or staying flat, there's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
We're back. That's right, we've got a grand total of 1 minute 45 seconds. Now, we were just talking about the exciting topic of service stations. My question for you, Chris Beecham, this is right up your motorway. What's your favourite service station in the UK?
There's that one on the M4 near Beaconsfield. That's quite nice, isn't it?
What's that?
I can't think what the name is. I was there recently.
So
Some of them are quite new and swanky, aren't they, actually, the new
Well, you're wrong. It's T-Bay.
T-Bay.
T-Bay is the absolute...
The one down the M3?
No. It's on the way to Scotland. You probably haven't been that far.
No.
It's on the M6 as you're going through the Lake District. And it's a service station, but then there's also like a little hotel.
Right.
And you wake up and you're just overlooking the Lake District. Beautiful.
Ah, I see.
Ladies and gents, let us know your favourite service station. But why were we talking about it?
There was the SSP group, which one of those companies, you don't know what they do. SSP runs restaurants and bars in service stations and the like. And so another decent set of numbers from them. 9% revenue growth, underlying profit up 17%. Heading into a loss before tax, but overall, I think a fairly hopeful update from then, really. So that was why we were talking about service stations.
Yeah, better to travel than arrive.
So often the case with markets. So often the case. It's my favourite cliche.
Yes.
Markets. Always the way.
It explains anything, doesn't it? Right, we've got 15 seconds till we get Chris Beecham opening the London Stock Exchange for the day. And what are we watching? We're watching VODs, obviously. We are watching Greg's.
Is that 8 o'clock? I call that 8 o'clock.
Go on. Ring a ding ding.
Greg.
Right, Burberry down 2% off the cuff. Wasn't expecting that.
Well, there's a share price that's gone storming ahead.
Right, Smith's Group also numbers. So Smith's Group, nice move there, up 3.6%. That's a good one. Let me just get the, another strong quarter. Now expects full year revenue growth towards the top end of its 6 to 8% forecast. Sees limited effect from US tariffs.
So that's the magic word there. If you can blame tariffs, then you get away with it. And if you can say that, then you even more positive update, really.
Lloyd's breaking out. There it is. Lloyd's has broken out 76.60. Whoosh. Up it goes. Marks and Spencer's 364. NatWest £5.12. Now that the government are down to their 1% holding. UK banks having a strong day, actually.
Look at that move.
Which one?
No, Lloyd's. I mean, what a wonderful year. Down from 53p to 76p in the space of not even 6 months. Astonishing. Right?
Kingfisher down 4.6 on that downgrade. Wow, that's more than we thought there. Vodafone, it had a strong move yesterday into the close. So that's down to where it was this time yesterday, down 1%. Just nice and boring, really. Nice and boring. Buybacks in there. Not as bad as results as I feared. So I'm fairly relaxed with that. I might even close my short. That's what I'm going to do right now while you run us through what's next.
Centrica moving up quite nicely after that news this morning, and there's another very, very strong performer from November, trading at £1.15 to £1.50 a share. And a nice trend if you look at the chart, very nice sort of rally, pullback, rally, pullback. You can add to that quite nicely if you look at that. A very solid performance from Centrica.
Right, let's get that graph up for you on Centrica.
What else have we got?
Yeah, that's good. Yeah, this company, I last traded this in 2018 and it was just an absolute show. God, yeah, even COVID, it struggled for such a long time to
20p
recover from
a share.
COVID.
Wow.
20p to £1.53.
So if you close your eyes and bought that 20p, that's a very good return for what is not a very exciting company.
No.
It has to be said.
I think my mother still got them from £2 a share.
Oh, well.
A good few years ago.
Swings and roundabouts.
But yeah, Lloyd's certainly. St Ives is also saying, Saif Buzal is saying best pies ever at TB. There you go. All that way for a pie.
Gloucester Services. Oh, I think I've done Gloucester Services.
Right, let's look at Europa. Who's moving in Europe? Chris, take us through there what you're seeing.
So another good day for German defence. Rheinmetall, another 1.2% near as. A decent recovery there in RWE. So energy firms. RWE, is that energy? It
yes.
is, isn't it? Yes,
yeah.
German stocks very limited.
It was coal, but now it's a bit more green.
Because there's an expectation, of course, that you expect the infrastructure spending writ large in Germany, really, as part of their massive new spending programme, which has gone a bit quiet, isn't it, since the Chancellor was elected? It's dropped off the radar slightly, but you assume it's working its way through.
Yeah, they're doing all the hard work now, I guess, aren't they?
Yeah.
Boise Gloucester Services is another level. Haven't done that there.
It's a bit West Country for you, isn't it? You don't really go that way, do you?
Excuse me, Cheltenham every March. And
I'm trying to think what it is now. The service station I'm thinking of is, but anyway.
Right, Greg still hasn't uncrossed, so that's what we are waiting for here. Let's get it up on screen because we'll be in the next 30 seconds. So our Greg's hold at the bottom at £17.70. What's he going to do as they open up more than 5% this very day? Or at least they were uncrossing there. Let's get it on a shorter term. Let's go a 2-minute chart. Let's see it pop up here towards £21. Where is it going to open, Chris Beecham?
Where are we now? I can't even see on the chart now.
We were born in 1990. Sorry, we were closed at 1999.
So we're on the numbers this morning. You expected to open fairly solid, wouldn't you? I think.
Yeah. Well, we know it's at least 5 because of the delayed auction. Unless that has taken it down again. Should be opening up any time now, though.
Here you go. Centrica has given you 36% a year over the past 5 years. 36% a year.
For the past 5 years,
Yeah.
from the very lows.
Yes. So, you know, again,
Okay.
pick your moments.
Decent.
That's the important thing with data mining. You have to pick your data. So it makes it look as good as possible.
Luke Moore is getting really technical on this. He's saying that T-Bay northbound is better than T-Bay southbound. There's a bridge. There's a bridge across.
Not in every service station, though. Sometimes you've got to pick the right side. You know, sometimes they don't work.
Greg's open, £21.50. Wow. What a move. So that is 6%.
Rising nicely.
Go on. What's that joke?
Well, bread rises, doesn't it?
They don't make bread, though.
They're a baker, though.
Right, so, and it's gone higher as well, 21.60 now. So, yeah, Greg's, for all you guys that were patient enough in Greg's, I don't think I was.
They were in the news overnight, weren't they? Because they've had to move all their drinks and stuff behind the counter to combat shoplifting. This is the...
That's sad.
So it's continuing to... Whether that impacts sales a little bit, but yes.
Yeah. Right, so good move on. Let's have a last little look at VODs and see where that is. It is Vodafone. Oh, it's had a move. Where is it now? Is it now up in the day? Vodafone. There it is, up 0.8%, 73 pence. So that's where it was when the CFO resigned. So good stuff. 73 pence for Vodafone. Right, we are going to take a very quick break after we check commodity prices. Let's get them up for the people. Chris Beecham, what are we seeing in commodity land?
Gold continues to have a little bit of a... It's consolidating, I think, around just above 3,200. So it's come off, but it seems to have stabilised for now. We saw a lot of buying last week below 3,200, around sort of 3,150. So maybe some further upside. It has to sort of ease off in the short term, but you can argue it's got further upside to come, really.
Sorry, go on.
Sorry, natural gas had an absolute shocker yesterday, didn't it? For reasons, I think Turkey found... Did Turkey say they found a big new natural gas field? So the price was down 4%.
Wow.
So heavy losses there for... And then crude oil holding up nicely, WTI around 62, despite that reports of that Iran deal last week, which unsurprisingly hasn't really gone any further.
Oh yeah, because it was so close, wasn't it?
Yes, it was just within reach, and then they didn't quite get it done.
So he hasn't managed peace with Russia and Ukraine.
Nope.
He hasn't managed a deal with Iran.
Nope.
He's come out so far with one official trade deal with the UK that didn't have any paperwork signed. But of course we're trading at 5,950. Of course we are.
So much winning. So much winning.
Right, okay.
But he has a new plane. He has a new 747.
He's got his plane.
Everyone's happy.
Yeah.
Really.
Yeah, so we've got Piers coming up shortly at 8:30. But first of all, Angelina's going to come in and she is going to grill Chris Beecham for Fast Markets. Join us in 2.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favourite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently.
But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Hey, welcome, trader friends, to Fast Markets with Chris Beecham. I was going to say Beachy Head. Everyone's like, why do you call him Beachy Head? And it's, I don't know, I just had this nickname for you the moment I arrived.
We should stress that we used to do these interviews Reuters TV.
Yes, we've known each other a long time. Let's talk about Greg's first, Fast Markets, because this, look at it go. I mean, like, it's broken through that key resistance there and is moving higher there. Did someone say they came in and bought at 21.50 earlier on?
I think, or lower than that.
Or was it 17?
17.
Well done you. Well done you. You've got in at 17. Ashton, well done you, because it's now moving higher. And if it continues with this momentum, 22.54, if you look back at the chart here, is where the next point of resistance is. Do you like Greg's?
I've never been in one.
Oh, there's one downstairs here at IG.
No, I pass one every day and I never go in, but there we go.
I don't mind the state bait, to be honest. And of course, they had the last time I traded Greg's was when they had that vegan roll bounce. Do you remember that?
Yes.
But yeah, it's one that's really had a really tough time recently, although it did very well post-pandemic, and also as we saw that revenge travel. Greg's, of course, really big presence in UK airports, and of course, more outlets than McDonald's.
Yes, we've done that fact this morning. There's only one. There's one more that has more than Greg's. There's only one company that has more. Do you know which one it is? I looked it up to self. It's not really surprising when you think about it.
Costa.
Yeah.
Ha-ha!
Costa comes out ahead at 22,000. Well, Costa Express, there's tens of thousands of Costa Express, with Costa's 22,587, so a little bit ahead, really. But Greg's is present in more locations.
Everyone in the gallery complaining about rubbish coffee from Costa. It's not as rubbish as Starbucks, have to say.
That's very true.
Yeah. I was asked June 17. There you go. I did hear someone 1770. Well done, you. Away from the numbers. And Chris, Vodafone reporting a return to growth in Germany has handled the hyperinflation. We talked about this already a lot this morning. Let's move over to Vodafone as well.
Yeah, to JP Morgan and Barclays still remaining very negative from the sound of the comment. So understandable because Vodafone's a big beast. It takes time to turn these companies around. But I think the CEO was saying this morning, Vodafone's a changed company. We've got out of Spain and Italy. We've got rid of the Vantage Towers business. It's reorientating itself away. So you can hope. Certainly the value destruction in Vodafone has been impressive over the past decade and more. Really, it was on those sort of fallen tech or telecoms giants and just hasn't recovered its way.
Despite Rich's best efforts.
Despite Rich's best efforts. I don't know anyone. The first time I met him, we were talking about Vodafone. I don't know anyone who knows as much about Vodafone. So taken with what is not exactly the most exciting company in the FTSE 100, it has to be said. But yeah, fairly good numbers and the buyback as well. A solid sort of statement of confidence.
Yes, and it has been saying that it expects Germany to return to growth, almost like a broken record for some time now.
Well, as long as you keep saying it, it's got to be true at some point.
Yeah.
And maybe the time is now because you're looking up, as we say, with the infrastructure spending, the way that the new government is planning to spend. It's the thing that might finally get things moving.
Well, let's see which side of the technicals the chart sits on. Having a look there, punch up my chart there, producer Phil and director Dom, and taking a look at that. If this is the daily chart there, and director Cam as well, or rather fake Cam as we call him. There are several interesting signals here. If you like double tops, triple tops, do you like those?
Take them or leave them.
We are now approaching a triple. If you're talking about a shorter time frame here, and if you look at my shorter line at the top there, if we touch, and 3 is good, 2 is tentative in the world of technical analysis, 3 is confirmation, and it moves back down, and where you see that circle there, could obey this also if you look at the longer time frame, but really it has to break that neckline there. I mean, that is the important thing. It has to break the neckline. So just looking, it's not exactly the cleanest of charts there, as we said.
No.
It's very volatile, very volatile. No surprise, really, given the rocky ride Vodafone has had.
It's not one of those elegant trends, is it?
No,
you get these
it's
share
not.
prices that just over the time go up, and they just steadily rally. Vodafone is definitely not one of those at the moment. I always think, even as a long-term investor, you can look at the long-term chart, the weeklies, the monthlies. If you've got a chart that's just going up, this is the kind of thing you're looking for because it's a statement of confidence by the market. You can filter these names that way. Is the chart steadily rising? Yes. So you put it on a list of stuff I'd like to buy when it comes off 15-20%. I was saying with Rich earlier, you have to wait for these pullbacks. If you're not going to do it every month, dollar cost averaging, pound cost averaging, then fine. But keep these charts in mind. It requires a little bit more activity, but if you're a weekly, monthly chart, you don't have to be checking it every single day.
And the person that taught me about technical analysis, I'll never forget, these price points, this person said, they're not just points, they're people. They're actually an indication of sentiment.
Yes.
Behavior.
Yeah, they are, exactly. If the market is happy to pay for this, that is your vote of confidence, if you like. The market. Look at Bunzl, for example. Look at the monthly chart on Bunzl. It's ugly at the moment because you've had terrible time of it. But you've got a very, very solid rise since COVID as well and before COVID. So yes, 2 nasty drops there. So you have to weather it out. But that is the kind of thing, it's just saying, for whatever reason, the market was saying we like Bunzl down at 2,400. And we're happy to buy back in again. It's too expensive at 3,500. We'll buy down at 2,500. It's sending you the right kind of message. So that's how you can use charts as a longer term investor. It's not just all about the 5-minute, 10-minute buying and selling. The 5-minute, 10-minute flashy is my first.
Flashy.
Used to say.
It is just showing the range, the resistance and support levels there, because it has dipped below that key level as well.
That's notable.
Yeah.
You can overthink this stuff, I think, sometimes. Maybe it's gone too far to the downside, but you can certainly say, okay, if it gets back above that zone, that's another vote of confidence. If you're looking to hold Bunzl, for example, for 2, 3, 4, 5 years, then move back above there tends to be a positive sign.
Let's go back to the broader markets then, because we are having quite a mixed session there. But we are seeing Germany 40, the DAX, and the FTSE still well in the black there. And we're just still seeing this, move into the DAX really hasn't lost its luster. Has to be said. Still moving back up there to just below the 24,000 mark.
And did cross over overnight. Just astonishing move down from those tariff lows, which it does kind of suggest you're baking in an awful lot of optimism at this level. Even if it goes higher from here, there could be a bit of volatile shakeout, because maybe you get some bad news in June or July, maybe earnings just don't quite stack up. We don't have to go all the way back to the lows of April for that to be then reflected. You could get a bit of a clear out. With this expected volatility, it could drop fairly quickly down to 23,000 maybe. You get a bit of reversal, and then it clears out the froth. That's the key thing, because it just gets stretched. It moves too far too quickly. It has to reflect reality.
So still a buy for you? Still bullish?
I think so. Just if you expect a pullback, and that's the kind of thing analysts say when something's gone up a lot and we think it might. I don't know when. If I could tell you when, obviously, again, I wouldn't be here.
He'd be in the Bahamas right now, and we'd be here. And the FTSE as well, still healthily, decently up there. Has to be said, up 0.5%.
Monthly chart at all, really. Direction of travel, it's moving in the right direction.
Yeah, it is. Let's drill down to the weekly there to have a look, and it's also still heading in the right direction. All this for the FTSE and the DAX, you think it's going to continue in this trend, given Trump is expected to soon head to Capitol Hill, if he's not already there, to rally support for this one big, beautiful bill act. And the fact that he is, still talking about all these phone calls, lots of phone calls over there.
It must be busy in the White House.
Must be busy. Phone calls with Putin, phone calls with Zelensky, as he tiptoes out of starting these calls. But then we're yet to see anything concrete come out of those calls.
But there'll be something else to talk about by the time we want something concrete.
Yes, the agreement to be seen that we are going to agree to still be talking. To be seen, to be talking.
Yeah, and markets can be content with that for quite a while, I think. As long as they're talking about talks. It's back to the Eurozone crisis where they have talks about talks with Greece and Portugal. That's what they were, the playbook. And it can work for quite some time, to be honest with you. It can keep markets going for a while. Eventually, you have to see reality. You have to sort of see the piece of paper. But for the moment, people seem content. But yeah, you do have to look at some of these gains and think it looks a little bit rarefied at these levels for the DAX. It's the best start to the year for the DAX in many, many years, even with the tariff volatility. So it just seems to be pricing maybe too much good news at this point in time.
Let's take a look at the FX markets, because we are also seeing the dollar basket there down 0.33%. Bear in mind, trader friends, we talked about this a great deal with Elliot last week, and also Jack, the dollar still looking like we're looking at weakness there. This is the hourly chart that I'm punching up there, and I've got the 200-hour moving average. We have seen it break below, and as I mentioned yesterday, if you're on the show, that a break below this, with conviction, will mean that we are heading to 100 and below, and look, there we are. We have had that move. This is the hourly chart there. Thoughts on the dollar, Chris?
Well, in many ways, if you look at it relative to purchasing power parity, it's overvalued on the longer term view. Bloomberg talking about this morning, so you can argue that it has further to go. That will help US exports, so it will. So even the US says that's a non-tariff barrier, essentially dollar strength in the short term. We know positioning, they've gone very heavily to short dollar institutions at the moment. The latest sort of fund manager surveys again.
This is the IMM.
Yeah, and the Bank of America survey saying that people just underweight the dollar in the short term, so maybe it's primed for a little bit of a bounce, I think, because the commentary on the dollar is the uncertainty with the administration, what's going to happen with the budget, all this kind of thing is dollar negative. So I think in the medium term, yes, you can expect it to fall, but in the short term, maybe you could be prepared for a bit of a bounce because people are sort of too bearish, I think, particularly. Look at that daily chart, for example. I think that's a key thing to bear in mind.
We are.
Yeah.
There's a daily chart for you. Let's check in on the euro and the yen as well. Euro dollar there. Let's check in on the euro dollar first. This is the daily chart there. I mean, you know, we are also, you know, because of this large skew towards dollar bearishness at the moment.
Yeah, it has done wonders to help the euro.
Yes.
Short term.
Yes.
It becomes interesting as a time when you've got the ECB still cutting rates, although sounding a little bit cautious on that for the time being, and the Fed obviously not moving. You expect it to be more dollar positive. But purely from a chart perspective, that looks like a fairly strong recovery there. You've had your pullback from those highs of late April. We're looking a bit overextended at around 115 or above 115. It's come back towards 112, found support around that 50-day moving average, pushing higher again. So watch that one, really. For the moment, trend still intact to the upside.
Yeah. But if you are bearish on this, then you would then say, well, you know, we're going to perhaps move lower because 115 is kind of like best levels already, and there might be
Yeah.
further.
I think if you sort of reverse back below 112, you might get a bit of a catalyst to say, okay, maybe there's more downside to come here. The hope, of course, is that, well, if Ukraine, Russia, if there's some kind of deal emerges, certainly between the US and Russia anyway, that maybe you'll get more companies going back to opening Russia, which is good for the European economy. We know Europe is sort of very keen on putting more sanctions on Russia as well. So
Yeah.
uncertainty there.
Yeah, and you know, that would tie in as well with the technical factors, because if we see that happen, then it might bounce back up. But then if not, then potentially
Might go up, might go down. But you have to let the price tell you what to think, really. Okay, you can be bearish on euro dollar, but you can argue the catalyst isn't here at the moment. The fact you've had a recovery the last couple of days suggests that maybe the buyers still hold sway for the time being. So as ever, it's fine to have a view, particularly if you're short-term trading it, but you need to let the price just sort of inform your decision.
tell you where it's going. Right, let's have a look at the yen versus the dollar there very quickly, because I know Piers has arrived. How much time we got, gallery? Fantastic. Oh, we got Matt Arbour as well.
Arbour coming first.
Yeah, fantastic. He is
people out.
loads of time. Matt is very exciting. Matt, I saw him this morning. He is wanting to rib Rich about Vodafone. So, do you know, you're my guest, but he's talked about it for about 10 minutes already.
Yes, you're going to do a Vodafone special on results day.
Dollar yen.
Well, again, lower high in that rally there. So breaking lower once again this morning. Obviously, the commentary around Japan and the debt situation, the PM yesterday saying their financial situation worse than Greece was the line he used, which is not one to inspire confidence.
No.
So that's why you've got certainly this pressure in the time being. Really, it's dollar against the yen moving downwards.
And I am at the moment bearish. Kind of think the best levels were seen back in March, and 139.89 could be like the next point if I move back out on this chart. Let's have a look at the weekly for you. Nice round number would be, of course, 140 there.
Big support down 140. Yes.
Yeah, there we are. Trying to move below that shadow there, as you can see. Gosh, I remember that number. I knew it was around 140. Right, Matt is waiting the wing, so we are going to have to head quite soon. Let's just get a few more thoughts. Raoul, give us your thoughts about Jamie Dimon's statement yesterday. I thought it was about time someone came out and stated the bleating obvious. Away from the numbers, Ange, thanks. I'll stay clear for now. Now watch it rocket. What did you think about Jamie Dimon's comment?
Yeah, we were saying earlier, you can agree with him that people are too complacent at the moment. Things have yet to materialise. It depends on your time frame, of course, because you can argue that things will get worse, but the price action isn't yet there in indices. As we said, you could short it, but it could keep going. That's the problem, I think. But as long as this rally remains disbelieved, if you like, then you have more room to the upside. But yes, I think he's making a lot of sense. People are expecting everything to get better from here, but the tariffs have yet to kick in properly. They're a much higher level. The aggregate US level on tariffs will be something like 17%, which is 7 times the level it was at the beginning of Trump's presidency.
Huge.
7 times. So this has yet to be properly factored in. And not everybody, you had Trump over the weekend telling Walmart to eat the tariffs and not impose costs, extra costs. But Walmart saying we can't do all of it. And it will be reflected across the US economy. So yes, the other shoe is, I will keep saying this, the other shoe in the data has yet to drop.
Even Intel's come out to say we can't continue to basically suck it up. The automakers have said we can't continue, we have to pass it on.
The expected cost was $2,800 for every US family. Of course, that will weigh heavily on the lower income segment.
In a time when he won the election because he said he was going to make things cheap again, essentially, right?
He went from that to saying you can only have $2 and not $30.
Yeah, and less pencils?
Yeah, fewer
something
pencils.
about pencils.
Yeah,
I seem to recall something about pencils.
A Republican president arguing for less abundance is quite the
Remarkable
sea change.
Well, they did say that when he was elected, he's managed to do 2 things that no other president has ever done. One is he's managed to get, all the usual foes to the table together. So the Korea and China and the ASEAN countries at one point said they were all going to come to talk.
Exactly. He can work miracles, just not in the way he intended.
And suddenly it was good for climate change because he was saying, one Barbie, I think it was $1.
Yeah, $1 or $2, they're not allowed 30.
Yeah, not 30. Like and subscribe, people, if you love this, because we are hoping to get a new bell. Otherwise, if we don't get this new bell, we're going to have to press a button and Chris Beecham is going to have to jump out of a box. I want one of those big buttons. They got those big buttons and this. We want an automated bell is what I want. That'd be great. Waka Waka says, don't worry. Bad news is brilliant for markets and any bad news is amazing for stocks. Nothing will take this market out, only up.
See, that's that kind of disbelief that makes it keep going up. You see, that's how this works. The longer people say it can't keep going up.
Yeah.
It's when everyone says, oh, it's fine, we'll be fine from here, then you should start to worry.
Yeah, that's called froth, Waka Waka.
Yeah.
Hope that helped Raoul. I think Diamond was, stating what lots of, CEOs out there have probably wanted to say for a very long time, right? But the fact that he's also now saying this is who is going to take over for me, he can, I think, in my humble opinion, can be a bit more vocal about this as well.
Find a backbone.
Yeah, find a backbone, as it were. But he has got a point. We got rising inflationary pressures, rising interest rates, market volatility. Phil is saying wrap up because Matt Arbour is out there stepping on his foot. Right. Thank you very much, sir. We will see you on the floor. For those of you wanting to talk to Matt, do slam all your questions here for Matt Arbour, who's going to take us through volatility in the coming week. Yes, and send us any questions to us at IG as well, and we will get that answered for you. Stay right there. Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favourite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months.
Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
Hey, welcome. It is myself and Matt Arbour here.
Morning, Ange.
Morning, how are you?
Yeah, good, you?
Very, very good indeed. Lots out this morning. Just taking a look at the markets here. Look, it seems like they've calmed down slightly. Just taking a look at the US Tech 100 there, down 0.33%. Germany 40 still shining there.
Yeah, fairly calm. Obviously, we called it right yesterday morning. We didn't think the downgrade was a market move, and as soon as the US opened.
That's right. We were talking about that's like really like behind the curve, that downgrade reaction. Don't know why there was even, any sort of news surrounding it, but hey.
No, interesting. Well, I did note it was quite interesting that we saw equities rally yesterday, but the dollar did continue to weaken, which has been a better barometer, I think, or a better canary precursor of perhaps unrest in the market. So the past few weeks, or past weeks certainly, there's been a sort of move in tandem with the dollar strengthening again as equities have gone back up, and we saw that disconnect yesterday.
Yeah.
Bitcoin, of course, decided to go its own way once more. But
yes, it seems to be going its own way a lot of the time these days, right? Let's just have a quick look. I mean, we're not at all sessions yet, I know, trader friends, but just want to quickly check in on Coinbase because I didn't yesterday. As I mentioned earlier, we're not at all sessions just yet, but just want to look at this because it seems like all is forgotten after that hacking incident.
All is forgotten after the hacking incident, and yeah, I suppose it's the other stock that's seen a surprisingly good bounce. United Health, which some terrible news.
Monkey Man, United Health.
United Health, but seems the power of
forgetfulness.
Management buying stock. We saw two really, really strong sessions Friday and yesterday. Okay, dead cat bounce, whatever you want to say, but a surprisingly good bounce on was it the CEO? CEO came out and bought a decent tranche of stock, and other people on the board also. So that vote of confidence in a company where some would say there are some rotten things going on.
Yes, and potentially more skeletons in the closet as well. And yet, it has had that bounce, right? Interesting enough. Let's have a look in the European universe as well. Got Germany 40, some of the defense stocks doing well. Rheinmetall there, top of the list. Going to zoom in for you there so you can see better at home. Trader friends up almost 2% there. Do you think much of this is down to what we heard from the Europeans and the British?
No. It was all pretty low-key stuff.
It was,
in
wasn't
reality.
It? The fact that we, didn't see much of a, big. I was waiting to see whether or not they prove us wrong because we were sat here yesterday saying that don't think there's going to be any news on that, and sure enough, we didn't. But I was checking.
It was all very low key. Nothing about industrials or anything. Of course, the farmers, get back some EU subsidies. Allowed to sell our sausages back into Europe.
Clearly, because we have
I'm not sure
standards.
I'm not sure how many sausages we sell to the Germans, but hey, we can do it again.
Yeah, let's do it.
More friction across the Irish border. Sausages and burgers.
You think they're too small for the German market?
Our sausage is too small for the
We are
German
talking about
market.
edible sausages here, people. Just to be clear.
The UK sausage is a different kind of sausage to the European sausage.
They are very different,
And the American sausage is actually completely different.
They are very different.
I found in America that the sausages, you go and buy some sausages and barbecue them, and it's a very different experience.
It is. They're more Frankfurters, aren't they?
Well, there's two sorts.
Pulling this back to markets, BAE Systems is what I was. Let's call this filler back of sorts, right? The BAE Systems is currently up slightly as well. Rheinmetall. And BAE Systems, of course, work together, and they support the likes of the British Army, and they have headquarters, I believe, in Telford.
Yes, in Telford.
Yes,
Telford, home of some classic British engineering.
look
The
at
Iron Bridge in Shropshire.
look
The
at
Iron
this.
Bridge in Telford.
Look at this amazing.
Cradle of British industry. Go and look it up.
I will do. For someone who's gone to the Bovington Tank Museum, very highly recommend it, people. Look at this chart here, because from a technical viewpoint, this is, yes, thank you, Phil, for whistling there. If only we need a whistle button, people. We need a whistle button. Because, it was done. Because this looks like a really, really, from the lows seen in February, this is a daily chart there, it is well supported. We did see that big gap up there, and it does seem to be moving higher.
Little colour in the announcements yesterday, though, around defence spending and share of defence spending, which, of course, is the hope or the continued bull story for BAE Systems, that close alignment with Europe will get more share of that large EU package.
Exactly. And I think with Trump, starting all these talks as well and ruffling quite a few feathers, but then, slowly almost moonwalking out these talks is only going to help support these defence stocks. Taking a look at elsewhere, we didn't look at the losers list, but I shall look at the DAX and the losers list there. Here we are. So we've got BASF, top of the list there. We've got Allianz as well. Take us through some of the big names there.
Well, again, all minor changes, no real story, sort of kind of noise changes. Mix across sectors there. I don't think there's anything you can really pull in. I suppose the motor, Mercedes and BMW both suffering. No, it's a quiet morning out there.
It is a quiet morning. Lots of the automakers and truck makers are down again today, but we also have quite a few big movers in the UK space. If you just
as I said, in the UK space, I was surprised to see the biggest mover on the FTSE 100 this morning was a company I had no idea what they did, or even that they were in the FTSE 100.
So let's have a look at elsewhere in the trading space as well. Trump and what he's doing so far with this bill that he says is the most beautiful bill ever. What do you think of that, and will there be any ramifications for the markets?
Well, it's the big beautiful. It's a great name.
Yes.
It's these wonderfully named bills.
Are you on the side of the bond vigilantes, saying that, it's chickens have come home to roost? We're going to start seeing, I think last time I checked the 10-year was like above 4.5,
well, this is,
right?
This is very much, the feeling, much I think Liz Truss gets a lot of bad press that she perhaps didn't deserve. It will forever be known as the Truss effect of this going for sort of very quick supply side stimulus, cutting taxes on the expectation that you get an economic boost, which is what Trump is going for. The market doesn't tend to like it when you have such high debt levels, which is the case of the US. So this idea that we cut taxes to boost the economy and we end up with a bigger take is, it's kind of unproven. And the market has shown that it takes a dim view, and perhaps that's why we're starting to see the dollar disconnect from the markets. Why the bonds, the yield on the 10 years went back about 5% yesterday in the US, didn't it? Which is an interesting mover and a mover that Scott Bessent has kind of referenced himself, and this is what they're looking at.
It's interesting. I found that interesting that they're now starting to reference it, whereas before it was almost like, let's ignore that fact.
Yeah. So one to keep an eye on, and what that backdrop has for equities, because we've seen in very recent times the kind of quick reversals when suddenly a penny drops that the bond markets are wagging the tail.
Yeah, but at the moment, the penny hasn't dropped yet. This is the thing. It hasn't dropped yet. We were talking in the back half of last year, saying that at some point it is going to drop. Rich has definitely been banging on about it since September. Are they going to fudge it, though? Are they going to manage to fudge it so that we get to the point where they keep talking, just like trusts, we're going to have enough growth to get us out of this fix before it becomes a huge, economic problem? Well, of course, growth is very hard to just turn on.
Completely, and behavioural changes when you make these kind of changes and different. As soon as people think that there is risk ahead, the spending taps turn off. So it's not easy.
It is not easy at all. Speaking of not easy, this morning, I've got a bit of tech gremlins, but I've got my watch list back up right now. Here we are. This is the FTSE and Diploma. We talked about this.
I'm saying Diploma Group, that
16%.
Spot quiz. Who knows what Diploma PLC do?
I don't know what.
I was there Googling this morning. I was thinking, Diploma PLC, have they changed their name? Did they used to be called something else? No, they've always been Diploma PLC.
And they make seals, is that right?
They make seals, not cuddly little seals either.
They make controls, seals, products in life sciences, and they are indeed, of course.
And who knew we built it, made things in the UK anymore? In fact, the top of the leaderboard, Spirax Group make things, and Smiths Group, previous Smiths Industry, metal detectors for airports. Things are still being made. There is still some UK manufacturing.
Rolls-Royce.
Still stuff to be exported.
Yeah, British manufacturing, it seems, for this morning at least, is back. It's back. They also make fluid power products as well, so hydraulics and stuff. Lloyd's Banking Group up 1.5% there. BT is well. Producer Phil is telling me to zoom in. Here we are. I know lots of you, have to wear glasses just like me, but I've got lenses in. But here you are. I hope that's big enough for you. National Grid also on the winners list there.
M&S reporting tomorrow, so always.
Oh, are they going to update on their? We've been hacked, people. We've kind of lost your data, but we are still in the process of trying to figure out what we are going to do about this. I'm hoping that they'll say something a bit more significant than that, because I'm surprised that they haven't yet.
Well, it's an odd one, I suppose, and we talked about it yesterday briefly, that Coinbase rewriting how to spin your narrative after being hacked. And I suppose the difference for Coinbase was the case that usually when you hack crypto exchanges, you steal a lot of coins. Coinbase spun it. They hacked us. They didn't steal any coins. They stole some email addresses. They stole your data, but they didn't steal the coins. So this is good, because we have the robust. What you care about are your coins. You don't care.
I'm not sure about your data or your details.
We all give our data up every day when we browse. Come on, so but they managed to spin it really well as a good story. We're not paying the ransom. They didn't get any crypto from us. We are secure, and that's what you want. You have your money in hacking a bank. If they steal your email address, you're less concerned. If they steal your money, rude word about what happens to that bank. Yeah.
Well, taking a look at M&S there, I'm just whacking up the chart for you, screen up there, and you can just see this is the daily chart there. I am a client, or rather a customer of both M&S and Bitcoin. What does that say about me?
Bitcoin, Coinbase.
Coinbase, sorry.
Will you ever spend some crypto at M&S? That's the question.
Here is the thing, trader friends. M&S, of course, reporting Wednesday, watching to see what it says about that cyber incident, which was disclosed, I think it was 22nd, was it the 22nd of April? And out there, analysts estimating that profits will be hit somewhere in the sum of more than 60 million pounds. So we'll see what they say about that.
What are you buying in M&S? Percy Pigs or?
Mostly food, actually.
Mostly food.
Yeah, I never go in for anything else except for the food. There's a very handy two, actually, not just one, but the two handy food M&S outlets in London Bridge. But yeah, I never go in for any sort of clothing. Oh, except for pants.
Pants. We're not going to talk about your pants on air, Ange. The viewers get too excited.
Yeah. Right, let's have a look at, on that note, elsewhere.
Still going sausages on the chat.
Are they?
Of course.
Oh my goodness me. Right, so.
You thought this was bad content, Ange. I know what the viewers like.
Smith's Group here, back on track.
Back on track.
Safe harbor. This is a British conglomerate here, up almost 2% as well. Smith's Group, annual organic revenue growth, top end, they say it will be at the top end of its forecast range, up to 8%. So that seems to have made investors and traders quite happy.
Yeah, and they are, as far as I'm aware, a market leader. We are, we might not be able to do semiconductors, but we're very good at making in this country metal detectors.
I know, right?
And security for airports.
To the point.
It's a growth industry.
Yes, security in airports and I guess logistics, right? And
well, particularly in a world where we went into the sort of regressive world where liquids in bags, make a scanner that beats that. Of course, every airport's got to have one, so you beat the queues, and it's been a good story for a long time actually for Smith's industry.
Third quarter sales rising more than 10% there, and as Safe Harbor was saying, because of this huge demand for detectors for all things, including explosives and dangerous items, right? What have you. God bring back the days when you could eat a proper in-flight meal with a proper knife and fork.
Metal knife and fork.
Oh, I remember those days. Remember those days.
You were smoking at the same time.
It was a little curtain that kind of, I don't know what they thought the curtain was going to do. Right. So Diploma, first half numbers, we talked about that already, are up very strongly, and hence its share price also moving on that. We also talked about Vodafone earlier. Vodafone still up 1.5% there. Organic revenue up 5.4% there, beating expectations of around 4.2. Of course, the share buyback also helping it slightly there. Sainsbury's up 1.6%. You're a Sainsbury's man?
I am a Sainsbury's man, actually. Yes.
Oh.
It's often it's a function of where you live, where the big supermarkets is, and what's there.
Yeah. It's not what you're choosing, it's what you're surrounded by.
Yes.
British American Tobacco, we talk a lot about sin stocks here, and we talked about this last few weeks as well.
So British American Tobacco, I suppose in the relative play, Imperial Tobacco had disappointing earnings at the back end of last week. The relative performance of BAT versus IMT is quite stark over the past week. 10% loser Imperials last week, and strong gains on British American Tobacco.
Yeah.
So in a classic pairs play, if you're playing your smoking stocks, that was the way to be. Perhaps not the way round you should have been across that pair over the past year, but certainly market seeing a change in fortunes relative between the two.
Yeah. How are the others doing? Like the American brands. Let's take a look at Philip Morris here.
Well, it's one of these. It's a sector that as well that is consistently. There's always talk of consolidation. These are large capitalised companies now. A lot of consolidation has happened over the years in tobacco, but Imperial is often talked about as a takeover target for Japanese tobacco. I think it is. British American Tobacco itself is the larger player. Consolidation, and it's one of these sectors that like the chat has died down for a while, but it feels like there can be more consolidation there as kind of the incumbents are having to move into whatever the technical name is for vapes.
Non-tobacco products.
Non-tobacco. Something to do with burning, isn't it? Something to do with
NTP. My dad was a heavy smoker and also in advertising and serviced many of these clients. So I'm very familiar on that. Those of you trading the space, Philip Morris, breaking through that key technical level there. Screens up, please. If we see a firm close above this, then the next technical level will be around that 17,000, we like round numbers here, 710, let's call it. So just a very quick roundup of the morning. We've seen big moves by the likes of the drug makers, Rheinmetall also moving quite rapidly in Germany, up market, up money there, if you are long that. And of course, we talked about Vodafone.
We missed the chance for a Greg's segue with our sausage talk.
We did, and we had
sausage rolls.
Yeah, sausage
Greg's.
rolls and ketchup.
And Greg's results. Come on.
On that segue, we've got Rich coming up because he complained about the lack of ketchup at Greg's, and he is coming back in to talk tech and all sessions with Piers. Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Welcome back, everybody. How are you doing? Did you enjoy that? Did you enjoy that with Matt Arbour?
Yeah, thought that was great. Good chat.
Talking about good chat, you at the weekend, you were meant to be in my pub quiz team, Piers Buckworth.
Yeah.
Not impressed. What happened to you?
I just wasn't. Well, big weekend with the kids for starters, and then
What did that entail?
What did we do? We did cricket, tennis, golf, running, bike riding, and swimming. We did everything. Plus, I wasn't feeling very well, so by the time it got to Sunday night, pub quiz was just too much. It was a stretch, I'm afraid.
Disappointed. I would have said we missed you, but we didn't. So let's look. All sessions are just opening. So Piers' area of expertise, US stocks. We're going to look at what the big movers are. There you go. United Health up there on the board at 323 people. We looked at those call options last week.
Well, I mean, obviously that's having a rebound from the regulatory headlines we had last week. And yeah, I mean, did you say you actually bought calls in that, or you were looking at buying calls in that last week?
We were looking at the options market, and that was we came to a 320, 370, 1 by 2 was the nicest payoff.
With what expiry?
That was June or July. July.
God, I was going to say the weeklies on that would have been quite fun.
Oh yeah, that would have been. Whew.
Yeah, I mean, I don't really have much to add on that, mate. I mean, it is what it is. I mean,
of course,
market's trying to work out what the implications and having a bit of a bounce back. As for everything else, it's all just it's always the usual suspects in the all sessions, whether it be on Bloomberg or whether it be on IG. It's the same stocks that are traded pre-market mostly in terms of volume. It's tech and.
So for our blind viewers, take us through what.
So at the top, screen. I mean, 3M. Strangely, is at the top of that. There may be some news attached to that, which I haven't seen yet, but the rest of it is Broadcom, PayPal, Amazon, Microsoft, Netflix, Nvidia, Apple, CrowdStrike, all the usual suspects with General Motors and Delta Airlines thrown in the middle there, all essentially flat. I mean, they were down 50, 60 basis points across the board, which is essentially in line with the market vibe right now. We've ground to a halt to a degree. When we can dive into the market in a minute if you like, but the rest of that stuff is just the rest of them, Tesla, Alphabet. There's no moves really that stand out. It's either plus or minus 20, 30 basis points across the board.
But the prices themselves are slightly different from last time you were on, right? You missed last week because you had a few sniffles.
Yep.
And but 2 weeks ago, what do you feel? What's the biggest mover in the last 2 weeks, especially the stocks that you mentioned when you were on?
Yeah, I mean, there's been a big rotation back towards the large, high-quality US tech companies. Mag 7, of course. Microsoft has led the charge.
Yeah.
Meta tried to lead the charge and has fizzled out a little bit. And Microsoft's now tried last night to trade at a new all-time high, which is fairly amusing given how the commentary on that
for you.
Less than 4 or 5 weeks ago when everyone was saying that Mag 7 was dead, and here we are yet again. And then, of course, the software names, the second derivative software names like Cloudflare, which is a name which I've liked for quite some time. That's now just absolutely redlining it. AMD, of course.
You're jumping ahead. Let me get the Microsoft
with
chart up there
Microsoft
first.
Anyway, here we go.
So after a really dull 2-year period, it's back up there to where it was, wasn't it? Trying to break out.
Yeah, I mean, Microsoft has had, the report. I mean, this is a classic example of positioning and fundamentals colliding perfectly. And, everyone, if you rewind the clock, 6 weeks ago, wherever that was, when everyone was selling tech and we didn't have the numbers yet. And the usual bears were out of their caves, telling us that it was the end. It was the end of tech. It was the end of the US.
Bears were out of their cave.
Well, it's the same story I've been listening to for the better part of a decade now, which is the same. Every time tech sells off, everyone's like, "This is it. It's finished. Time to sell this. Time to sell that." And then they come out with an amazing report, and we find ourselves back at the highs.
Yeah.
And Microsoft are obviously doing a lot of good stuff, right? And I think we're going to speak with Ange a bit about what they're doing in the AI space, but. It's going to be really interesting to see what happens up here. I mean, my view is that this is a good example of the leading tech stocks that are pushing their luck on a short-term basis. I mean, I never once in my career have I seen a stock no matter how small or big, go parabolic and not have a moment of consolidation.
Especially one worth $3 trillion.
Well, I know, exactly. I mean, the fact that the size of this company and the sheer move it warrants some pause at this level, but such is the market that we're dealing with right now, where the positioning is forcing everything higher. So
yeah. And the next one you were going on to there?
The other ones to note, AMD, and the three big standouts. I mean, there's a few to pick from. Let's just take three. So Microsoft, let's deal with AMD next.
So that, again, the 2-year chart doesn't paint really a picture.
No. I mean, this is a completely different situation. I mean, the only reason why I use this as an example is because they have obviously been in a downtrend, and the analysts have been quite negative on it.
Yeah.
And then they had a good report, and that chart doesn't tell the story as it does with Microsoft to a degree, but that's almost 50% off the low in the space of 4 or 5 weeks.
That's incredible, isn't it?
And on top of the fact that they had better numbers and everyone's kind of been rushed back into it, we also had a huge buyback, which was a surprise, and we also had the Trump genius deal that he's done with the Saudis, whereby he set up a new data center deal with them called Humane, whereby these guys and NVIDIA are selling a whole bunch of chips into them. So
take us through that.
Yeah, so it's, I mean, he did warn us. Trump said, I'm going out to make, in his usual flamboyant fashion, said, I'm going to make some massive announcements, blah, blah, blah. None of us were sure what they were going to be.
Yeah.
But lo and behold, he's just doing what he does best, which is do deals, right? He's managed to get the Saudis to invest, circa $1 trillion into US tech companies, ultimately. I mean, the basis of it is a data center project based in the Middle East, which would be the first of its kind, to try and pivot away from their old dependency a little bit and more into the AI tech space. And of course, the two GPU accelerator companies who build the most powerful, most important chips for the data center, of course, are NVIDIA and AMD. Very
similar chart recently on NVIDIA, actually.
Yeah, I mean, NVIDIA is obviously a different kettle of fish, but these guys are the GPU players. And although NVIDIA didn't have as negative a sentiment as AMD did and was not sold off as hard, it's not a surprise they have slightly similar charts. Yeah. They're both very much in bed and very much part of that Saudi Arabian deal.
Perhaps until the numbers come out in a couple of weeks' time.
Yeah, so we've still got a whole bunch of numbers. I mean, we refer to it as earnings season, but it essentially never ends. I mean,
yeah,
we've got over the next 2 weeks, we've got some very important companies. We've got, tomorrow night we've got Snowflake and Target.
Yeah, so there is a question on the chat already asking us about that Snowflake. So shall we?
Yes, let's do that. Yeah,
thoughts for that.
Great. Yeah, so I mean, Snowflake, what's the question?
That was from Boise. Piers, what's your thoughts on Snowflake earnings this week?
Oh, great, yeah, okay. Well, I mean, there's only 3 software companies that this earnings season, and I must stress that I really hesitate to recommend anything into numbers ever, because it's a minefield, and no matter how much you may think you've got it lined up, you don't know what's going to be said on the calls, etc. But this quarter, there is the ducks are aligned for a number of these software companies. 2 of them have already reported, AppLovin and Cloudflare, and the third one in my group is Snowflake. And the reason why I like Snowflake is because the channel checks and the momentum in their business is kind of undeniable, unless there's something that none of us know and none of us have been told and none of us have looked at.
Yeah.
The last sort of 5-6 weeks has seen a rotational selling out of these names and then out back into them. So it's kind of de-risked a bit. But the bottom line is the momentum in their business is picking up significantly, right? I mean, these guys are the slightly dumber version of Palantir, if you want to put it like that. And by that, I mean Palantir are focused in exactly the same business, but their Palantir are pure analytics, whereas Snowflake are more data storage within the cloud, and data management. So that's why I call them the slightly dumber version of Palantir, but nonetheless, they're exposed to the same customers and the same tailwinds. So I think that I'm going to put my neck on the line and say that tomorrow night is a strong report for Snowflake and the stock is higher, would be my view.
It'd be interesting if it gets up to that recent level that we saw back in February at the 192. So I would expect, we'll check it on the Tasty platform, but the expected move will be more than 5%, obviously.
Well, I mean, the options implied moves, I find, are just scarily accurate.
Yeah.
Right? Historically, it's crazy how often they get, whether it's up or down. when the prints come out, you think, oh, it's going to be miles away. And by the time it all is said and done, the conference call is done. Often you're so close to that number. So what did you say it was, 5?
No, it'll be much more than that.
I would imagine, I'm just guessing, I would imagine it's somewhere in the region of 8 to 10 would be the move I would expect.
So if it is higher, that will be a nice breakout towards bridging the gap that we saw back in February 2024.
Yeah. And it would be a similar move in proportion to Cloudflare as well. Cloudflare had a very similar setup in terms of expectations, business momentum, et cetera, et cetera. And actually Cloudflare's numbers were good, but they weren't great. The stock was down a little bit after market, and then by the time we opened up the next day, it was up 10%. I could see an almost identical pattern tomorrow night for Snowflake.
Yeah. Okay, great. Next one. Piers' view on Palo Alto. Away from the numbers, we'll come to you next.
Yeah, of course. So, I mean, their numbers are today, right? Tonight?
Yeah.
Palo Alto, I just have very mixed feelings about this company because there's no question they're in smack bang in the middle of a secular growth trend being cybersecurity, but they are the firewalls, they're the legacy hardware provider. And versus a CrowdStrike, for example, who are the cloud-based cybersecurity and Cloudflare, sorry. CrowdStrike and Cloudflare both do cloud-based cybersecurity, which is no hardware, cutting-edge, modern growth space, whereas Palo Alto are a bit mixed, and they don't really do much through the cloud. It's more traditional hardware. It's a great business, but it's volatile, and their earnings are historically very difficult to call. I mean, you can have gaps down of 10, 15%. So my view on Palo Alto into numbers is avoid, because I just have no idea whether it's going to be up or down 10%. And good luck to you. I'd prefer to wait till the numbers come out and buy a dip in that stock.
Nice. Plug Power.
Plug Power has been an absolute shocker recently, and one that I stupidly opened my mouth about a couple of weeks ago.
They've hung you out to dry on that one, haven't they?
Yeah, well, it's fair enough, and it is what it is. But the update on this stock since I initially spoke about it was they had an earnings report, which was wasn't a disaster, but it was pretty dire. And the bottom line is that the bears are all over this because of the cost of the interest on their new debt restructuring. Listen, this was a short squeeze, highly volatile, highly speculative idea. It's probably got another big short squeeze in it. It's hard to tell when, but this is a stock you would only touch if you are incredibly keen on risk. It's a punt, and it's a short squeeze. But fundamentally, this company's in trouble, so that's why it's acting like it is.
Okay. Avi Fine joined us in a couple of weeks ago. He is an option player. Any opinion on Target reporting tomorrow? Yeah, well, I do actually. I mean, Target's fascinating because they are trading at a valuation which puts them below the COVID stress lows. Wow. Which is an extraordinary thing. If you think about that, they are now trading lower than where they were during the retail panic of COVID. Look at that chart. Now, this company has struggled for years with execution, inventory control, most recently, as stupid as it sounds, theft control. They've got huge problems in that department. Yeah. They've been bleeding margin, they've been bleeding sales, and put them up against, Walmart obviously is a different business, and they've got a lot more online as well, but if you put them up against each other, which people traditionally have done, or Costco is also a very different thing because it's a membership model. So the closest comparative to Target is kind of Walmart. It's just like such a better business, Walmart. So Target have a lot to prove, although I think that the stock is, if you're a value hunter, although it's a bit of a value trap, this is crazy cheap, this stock. Do you know what that?
I mean, this could be up 17 to 20% on a good earnings report tomorrow. Easy. Wow, that's the kind of move.
So a real good one for the options market.
I wouldn't imagine. It's probably worth a punt because it's just so oversold and so hated.
But do you know what that chart reminds me of?
Plug.
That reminds me of a night out with you on how enjoyable your conversation is.
There he is. Okay, that's good chat.
As the evening goes on.
Yeah.
Right, the new subscribers the new people asking questions there. Before we go on to Intuit, for you on Intuit, you got one? Then please hit that subscribe button. So we're going for 700, we're almost there. Go on Intuit.
Yeah, I mean, Intuit is just old school accounting software, basically, essentially. Software as a service. It's becoming I feel like they've. Can you bring a chart of it up?
Yeah,
I haven't looked at a chart. Yeah.
Intuitive machines, is that the right one?
Intuit QuickBooks. Oh, hang on. Which one are you
that's the
talking
wrong
about?
one, isn't it?
No, that's not the stuff that I thought you were talking about.
Intuit. Yeah, there we go. Intuit Inc. 670.
That's the stock. Yeah, there we go. You got it there. There we go. So this is part of a group of software companies who, and you could the group is broad, and these guys were the original 2015 to 2020 software as a service, recurring revenue model. Great company, and look at it. Look where it's trading. I mean, so what's
that's
the time
a beautiful chart. That's a cup in handle, isn't it?
Yeah, I mean, it's a great company. It's so consistent. It's so reliable. The subscription business. It's one to buy. The reason why I haven't found it, I just kind of don't focus on it very much, is because it's kind of entering a slightly mature phase, where growth has come down from sort of, initially this stock, back in 2000 and whatever it was, 15 or whatever it was trading. It was like 100% growth. Now it's probably, I would imagine, I haven't looked at it, it's probably 15 to 17% growth right now.
Wow, look at that.
Something like that. I mean, look at that. This was one of the darlings of the software as a service race, right? There it is.
Yeah.
Okay, and then it's obviously come off in 2022, with the macro and the inflation, made it all the way back up. But look, it's almost trading at the highs. It's one of the best stocks in the group. I just struggle to get too excited about it, because I don't see where that explosion of growth is going to come from, because they're not really an AI player. And, but in terms of having a software company in a portfolio, one to buy on dips, great company, great stock.
Excellent. Right, we've got, I'll give you 3 choices and do one of these, because I do want to leave some for Angeline to go through with you. Ondas Holdings, Rubrik, or CoreWeave?
Okay, well, all right.
One.
Rubrik, I need to do my homework on that one. But CoreWeave is obviously the latest retail shiny plaything in the US market. And I just think this is astonishing. If you look at the business, these guys have got quite a lot of debt, and they've got a pretty...
It's a recent IPO, obviously.
It's obviously IPO just the other day. Listen, this is we're in a market right now where retail are all over this kind of stuff, and CoreWeave have 3 or 4. They're basically the hyperscalers are their customers, and they are high growth, sexy, shiny AI data center. Brand new business, but if you look at the business itself, obviously they're miles away from turning a profit. They've got quite a lot of debt, highly speculative. They actually just raised some money the other day. I think it was as much as I need to just double check that number. It was as much as 14 billion.
Wow.
What was the number they raised the other day? Actually, it might have been. Anyway, it might have been less than that. But 4 billion. There it is. 4 billion. Okay, go up. Keep going up. Down there. Oh no, not that one. That's it. No. Either way, I forget the number, but it was well and truly into the billions. And it's dilutive, and it's just yet another. And the stock went up 16% on the back of it. But that's the market we're dealing with, right?
Yeah.
If you can get a CB in MicroStrategy, which which is priced 50% out of the money with no coupon, and the market will keep buying that too. So it's a retail darling. It's hot. I can't touch it because there's no fun. I can't get my teeth into it. I mean, you can trade it. It's highly speculative, with a bit of a shambles of a balance sheet. So, but huge growth, 120% growth.
Right, it is almost time for Angeline to come on. However, Piers did miss my pub quiz on Sunday night. So, as a punishment, because it was a crap excuse as well, as a punishment, I'm going to give you the anagram that was dished out to me. So this is for you guys at home as well to enjoy during the break. We're going down the countdown route here. What this anagram is a luxury label that we know clearly you don't shop in.
There he is.
But luxury goods. Think of what you would see on the catwalk, and I'll leave you with this. The guys are about to put up on screen. NY, State, Universal. Rearrange the letters and tell me what luxury brand that is. We'll see you in 2 minutes after the break.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Amazing. I love that. That is quite, yeah, we'll have a...
To the show with myself and Piers. This is so exciting. I love it when you come on because we can talk tech until the cows come home. Loads of questions out there. R. Sachs, good morning to you, Piers. She's asking about Rubrik and CoreWeave. I've got CoreWeave up on my screen here. Let's have a look at that first. CoreWeave, of course, this is the leading AI cloud infrastructure provider. I think you've called it here before. You've spoken about this before. We talk about AI hyperscalers a lot here on the show. What do you think of CoreWeave? Yeah,
well, we just to at the risk of repeating myself, because we just did this a second ago. This company is a recent IPO. It's hugely speculative. Got a very dodgy balance sheet. Bears can tear it apart from all angles, but the fundamentals are irrelevant. It's high growth. They have the top customers in the hyperscaling world, and we're in a retail tape who are bidding up high growth AI names, and this is right in the firing line. So, I mean, they raised some money the other day, which for any other company would mean the stock went red. This was up 15% on the back of it. So that's the kind of market we're in. That's the kind of stock we're dealing with. So having a view on it is, listen, if I had to summarize my view, this company has a hell of a lot of potential. They're a little bit concentrated in terms of their customer base, but they are concentrated in the best companies in the world. So is that a bad thing? Maybe not. If they can maintain their growth rate and improve their balance sheet and profitability, they're going to be one for the future. But in the short term, this is a retail darling, right? And the retail guys live by a different set of rules. Yeah. And so the fundamentals are essentially irrelevant. But also produces, its core business relies on the fact that AI workloads are going to just increase. Just taking a look at the charts there, this is the daily chart that I've got up for you guys. It's had rapid expansion recently. Revenue's been rising as well, some 420% rise year on year. I think that was the first quarter number, right? Yes. The key thing to watch out for in the tech space is always the strategic partnerships, right? NVIDIA is a big investor in CoreWeave, and they put $350 million in, I believe that was the figure, during CoreWeave's IPO. That's according to Barron's there. R. Sachs also asking about, what was it, Rubrik, I believe. Let's have a look at that for you.
Have we done this already?
Yeah, well, we
RSX?
kind of we touched on this question in the previous session.
Okay, cool. If we touched on this, then RSX, I'm just going to quickly show you the technicals here and not the fundamentals, because Piers has already done that with you, with Rich. But take a look at the technicals here, because this is what I like to see here. We have had 1, 2, 3 touches there, and that is what we see there is a triple bottom formation plus a gap up there as well, which has been closed, and then it has moved higher. So this seems to be obeying those rules, and just be careful though, just showing you the price action on the right hand side, because we are seeing it get to the top of, if you notice here the neckline, then that would project from the bottom of the last touch to the top of the line there, where it might head. You just project that across, and we are near that point. Right, we've got another question on the chat. Joby Aviation. I'm loving the amount of engagement this morning.
What are we talking about?
Joby Aviation, Derek is asking.
Yeah.
Let's have a look at the chart first. Let's whack that up for you. Looks like a upward trend there. This is the daily chart, trader friends, since April 2025. We have its price action trading close to where it was around February there. Joby Aviation, one that I have to say I don't normally trade. One that you're familiar with, Piers?
I mean, I know what they do, but I don't follow the stock very closely. To be fair, so I'm going to have to pass on that one.
One that is followed very closely here, no thanks to likes of all you trader friends, including Monkey Man as well, is Tesla. We have seen this breakout. This is the daily chart here, and Tesla, of course, all sessions on the IG platform as well, up 0.6% here. Piers, Tesla, one that you like?
Yeah, I mean, no, God, Christ, how can anyone with a straight face have a call on Tesla? It's Tesla. They live in a different universe. They always have. They probably always will. It will all boil down to whether Elon Musk is sitting in the seat and whether or not robotics is on track, because the margins in their core EV business, which used to be relatively important, are no longer anywhere near as important. In fact, they've had some shocking numbers over the last 6 to 12 months, and the stock has reflected that to a degree. But then, of course, the second you get Musk,
one tweet or one
tweet, it's the ultimate cult stock. Listen, let's put it this way. Let's take Ron Barron's view, right? Ron Barron's a massive bull. He reckons that if you do $50,000 per robo-taxi and you do $1 million, so you've got $50 billion worth of annual revenue for robo-taxi, right? So that's the bull case. Let's assume that that's right. Then the stock obviously can go a lot higher. But all the assumptions, all the bullishness boils down to 3 things: robotics, AI robotics and the future growth, not the car company, Musk being in the seat, and the risk appetite from the cult crowd. So
I'm glad you said that, because I don't think it's the car. I don't think that's it.
I mean, the cars. If you value the, I mean, I think we all know that, right? I mean, if this was valued as a car company, I mean, God, if I had £1 for the amount of times I've heard people say that, the stock would be miles lower. But it's not. It never has, and it probably never will. And if you ask Musk about what this company is, he'd tell you it was a robotics company.
No.
Right. The future. So how can anyone who's a fundamentally based trader have a view? You can have a technical view if you want. Like, my view is, good luck shorting it. Probably won't work. Yeah. And if I had a gun to my head, I'd be long.
I think it's on that note. Woof. I think it's robotics and space logistics.
Yeah, correct. Oh, no, exactly right. Sorry, yeah.
And so
and by the way, look at SpaceX. I mean, the stuff he's doing all around the world in terms of with essentially taking over and completely changing the world of satellites and telecommunications.
Totally.
And he's not making a lot of money out of it yet, but it's certainly on the case. And someone's just put in the chat there, forward PE of 165. Exactly, right? You know, the valuation, but again, no one cares about the valuation of Tesla. If they did, it would be a lot lower.
This is a cult stock, people. Right, we are going to have to wrap it up soon. However, do like and subscribe. If you love this segment, this tech segment, do like and subscribe, because we want Rich to be able to ring a much larger bell when he's here, sponsored by the London Stock Exchange. And we know that you are out there, many of you watching, still haven't liked and subscribed yet. We're trying to get to 700 this week, 750 this week. Where are we right now, Producer Phil? Right, 700? Let's like and subscribe and get us to that 750 mark, right? Everyone, we'll be right back with Rich right after this. Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Good morning and welcome back to the show. And for the new joiners, very much welcome you to Trade Live with IG. If you are new to the show, please subscribe. But this is a segment on, first of all, we're going to do a CEO interview with Andrew Webley of Smarter Web Company. That's coming up very shortly. But first, for those that are new to the idea of Treasury systems, I want to take you through the theory of accretive issuance. Right? Now, this might be the first time you've heard about it, or you've obviously seen the success of MicroStrategy. Now, we've got a UK company that is trying to go down the same route. For the very first time, a company in the UK is going down the Bitcoin Treasury route. But I want to take you through the whole theory behind it, why it's worked for strategy. And I'll actually take you back to Tesla. The guys were talking about it before the break there. Now, I was a Tesla bear, right? 2021. The stock kept on going higher and higher. The valuation was doing my head in. Because my background is fundamentals, right? My background, I worked for Credit Suisse. During the financial crisis, I was running a $100 million portfolio for one of Europe's biggest hedge funds. And there was a guy there who was fantastic at explaining quite complex concepts in a simple to understand way. So that's what I want to do with you guys here about accretive issuance. Now, the whole theory, the whole success of Tesla back in 2021 was that they were fairly short on cash. They were short on liquidity. But what they had was a richness of valuation. As the valuation kept on going higher and higher, I was short the stock. I was crying out, what is going on? They don't have enough cash to continue and expand this production of the electric vehicles. But as the market cap hit $500 billion, Musk was genius and he issued 1% of stock. So he managed to take in $5 billion of cash, and that enabled him to build the Berlin factory. So he was issuing stock at a high valuation, and he was taking the cash and adding to his assets, which then were fulfilling the expensive valuation. So kind of chicken and egg situation, which one comes first? Most companies have to build up their assets and then they receive a premium valuation. Sometimes it happens the other way around, and that takes us into the idea behind strategy. Now, I want to take you through these very simple building blocks, right? Imagine that is a share price of a company that is IPO'd. It's taken the money from the IPO. People are buying into is the idea, like Tesla back in 2021, the idea you can use this premium valuation to raise cash. So what you see with these companies is they do a lot of equity issuance. So they might issue new shares and raise some cash, but because it's 6 times the valuation of the underlying asset, right, 6 times multiple, then suddenly the money you've raised adds a lot more to your asset value than you dilute your stock by. And if you're raising at a 7 times multiple to NAV, right, it dilutes it by about between 7 and 10%, but you add 30 to 40% to your net asset value. And all you do is rinse and repeat, because every time you add to your asset value, then you could see the stock going higher to reflect the same multiple. So it can start at 10 times NAV, maybe it goes to 8 times NAV. The job of the CEO is to continually find pools of liquidity and pools of demand. As they find additional demand to buy the shares, it gives them an increased currency to then issue more equity, take the cash, and continually buy more assets. So a way to think of it is, right, how many months do they keep on doing this till their assets build higher and higher and higher? And at some point, it won't be at a premium to the NAV anymore, right? Now, we're talking about any asset. We're talking about gold or cars, watches, whatever. But in this case, the idea behind a community that truly believe in the underlying asset, and they don't believe so much in the fiat currency, then that's where the key comes from. That's what allows it to trade at such a premium valuation. 7 times the assets, 8 times the asset, 15 times the asset. If the management team can continually go around, in this case, the UK, and they can get new demand for the stock, then they can continue to issue equity, have a 10% dilution, but add 30 to 40% to the asset value. And that's what strategy have done so successfully, to the tune of $110 billion. This company that we're about to talk to the CEO only trades at £45 million. That's right, 45 million market cap. It's only been around for a few weeks. It trades on the Aquis Exchange. Now, I'm not here to say to buy it or sell it, right? I'm just here to educate you on the process, because only people who understand this process and are aware of the risks should be involved. And only people who understand that you're buying a volatile asset on top of a volatile asset should be involved. And that's the important thing. Now, whether a company is successful or not depends on the credibility of the management team. It depends on how trustworthy the management team are, right? And that is exactly why I wanted to get Andrew Webley in and us to go through his background and the idea, the history of the company. And I think it's a really interesting interview, and I'm very happy to see so many new viewers on the show today. In the comment section, please hit that subscribe button, because we're going to continually update you on this company if it's something that the viewers want to do. What we're trying to do here at Trade Live with IG is highlight interesting investment opportunities, highlight interesting investment stories and trading ones. Yeah, it's great to have all the new viewers on, so please hit the like button, hit the subscribe button. And we are very excited to take you into this interview with Andrew Webley, because there was, since we actually recorded this, there's been another update this morning. He's bought more Bitcoin. He's almost doubled his Bitcoin holding, right? As we said, they raised cash last week, and now you got an update this morning that they now own 35 Bitcoin. A little bit away to get to the size of Strategy. Strategy, of course, owned 575,000 Bitcoin, but every acorn has to start somewhere. And yeah, you'll see from this interview with Andrew Webley, it's a very interesting opportunity, potential, and I'll let you judge for yourself there. So thanks for joining us, and coming up right now, here's the interview. Welcome back. I'd like to welcome Andrew Webley to the show. How are you, Andrew?
I'm very good, thank you. And you?
Very good indeed. I'm very excited about this, because this is our very first time having a CEO of a listed company on the show. Now, the company, the Smarter Web company, has a really interesting background. Take us through the history.
Yeah, so I started my career in 1999. I joined a very small company that became a very big company called Hargreaves Lansdown. I was their head of online. After 10 years, I left that company and I set up my own company. So the Smarter Web company was set up 15 years ago. Right. It was set up around a system. So I'm a developer, and I developed a content management system in the days before everyone had a content management system. Nowadays you have one if you've got a website. Back then, less common. And I built the whole business around the technology. Over a period of 15 years, we grew the business, right. Still to a fairly small size, but pretty profitable. Yeah. And then about 4 years ago, I came across a company called MicroStrategy, now known as Strategy, as an investor. So I'd been investing in Bitcoin for it's almost 10 years now. Okay. And I liked investing, I liked Bitcoin, and I saw what Michael Saylor had done, and I thought it was fantastic. And then fast forward there a little bit, I thought the UK should have something similar. So that's how the Smarter Web company went from being a private business to being a listed, growing business, and yeah, that's how it started.
God, fantastic. And so, we've got the web development part of the business, the operating company, but then you've obviously, you've also adopted a digital assets treasury. So run us through exactly, for those that aren't even sort of au fait with the MicroStrategy idea, what does that entail?
Well, it's quite simple, actually. The best way to think about it is that there's 3 parts to the business. Mm-hmm. So you've got the core operating business, which is, the thing that's been going for 15 years. It's got 250 plus clients, 30% plus reoccurring revenue, very profitable with great scalable potential. So that's one part. Mm-hmm. The second part to the business is what we've described as the medium to long-term acquisition strategy. So that's, in very, very simple terms, buying other similar things which produce a return for the business. They could be very, very similar. They could be a bit different. Who knows? In the future, they could be very different.
Right.
And then the third side of what we do is we have capital in our business, and that capital is used for a particular purpose. Now, my belief is that digital assets, specifically Bitcoin, is much better than pounds, dollars, gold, silver, whatever, in my opinion, as something to store your value for the future. So as a business, it doesn't matter whether you're a private company, a government, a public company. I believe that that's an effective way of storing the value for the future alongside what you're doing as a business with your business priorities.
And then obviously working with your previous employer, you are an expert on ISAs. So you've actually structured the company in a way that it's possible for ISA holders to invest.
Yeah. So if I go back to the last couple of years, investing in strategy and, then other similar businesses, I felt that the UK should have, its own sort of offering that was similar, i.e. a technology company with, a digital assets plan. So to me, one of the drivers of this was I wanted a company that I could invest in, specifically within my ISA, and I couldn't find one that I was happy to invest in.
Yeah.
So, ever since ISA started, I've been investing, sometimes all, sometimes some of what you can put into an ISA. And it was absolutely critical, even before I decided or found that there wasn't one, and decided to list my own business so I could hold it within an ISA.
And how do you even start going about that?
Well, I'm just a normal person at the end of the day, so it's quite difficult to list a business on the stock market.
Yeah.
It's quite expensive. You need quite a few different people involved. I had probably, let's say, 90% of the expertise, the knowledge, the contacts. And in the end, when I was thinking, well, no one else is doing this. I was checking the news feeds every day. So, I'm going to have to do it myself because, it's a great idea. And so I spoke to somebody who I respect immensely, who's our chairman, Sean. And I said, look, this is what I want to do. What do you think about it? And he said, yeah, absolutely love that idea, Andrew, but change this one bit of it, which is how it went from being, I think I can do this, to I can do this, to we are doing it, to, we're actually live, listed, and growing pretty successfully, actually.
And on the IG platform.
Yeah.
Which is exciting for us.
Yeah, really, really exciting. And it's amazing to see. Obviously, I'm very, very busy running the business, but when I look at the market and you can see, people are buying and selling and the price is going up and the liquidity and things like that, it's fantastic. Yeah. And those platforms like IG, I've got an IG account myself. I've had one for many, many years. It's probably the best platform in terms of technology. It's definitely the best platform, definitely the best app as well. Yeah. So, for me to see those sorts of platforms trading, my very own company, when we listed the old business, this is going back 16, 18 years ago on the stock market, my former employer, I was a core part of the team that did that.
Oh, wow.
Very senior, but it wasn't my business. I was a shareholder, but I was one of the team. When you list your own business, that's your life's work, that you've put 15 years, pretty much 7 days a week for those 15 years, and then you see that trading on the stock market, it's pretty cool.
So as we speak at the moment, the market cap is 45 million?
Yeah, approximately,
right?
Yeah. It's come down a little bit.
Yeah. And so, how should potential investors think about that? What's the profitability from the core business? And then how are you using the balance sheet in the treasury on the digital side?
Yeah, so it's really important to understand what you're investing in when you invest in anything. One of the things that I felt in terms of why we ended up listing my business was I wanted something to invest in that was similar to what we're doing, that I had confidence in. So how do you get confidence? Well, you've got to have a good management team. Obviously I'm not I don't think I'm an arrogant person. I would hope that I'm not. But we've got someone like me who works very, very hard, who cares about it, who's very invested in it. We've got one of my other directors, Tyler. He runs the biggest Bitcoin media company in the world, the biggest Bitcoin conference in the world. Really, really successful. Runs a hedge fund, one of the top 5 performing hedge funds globally in the last 12 months. Part of one of the companies that's been the biggest, the most successful global equity in terms of price performance when you screen everything above $250 million.
Right.
Japanese company called MetaPlanet. So, we've got a good team, I think. We've got a very, very low cost base. So if you look at our admission document, which is on our investor relations website, it's clean, tidy. It's the sort of thing that I would want to invest in.
Yeah.
The business is growing. In all fairness, I can say that we've been profitable every year for 15 years. I'm not allowed to, and I wouldn't guarantee we'll be profitable this year because of the slightly higher costs. But that's certainly the objective. It's very easy for anyone to look at our capital position. So last night we did a fundraising. We did it start to finish within 4 hours. We raised, pennies below £3.5 million. We did it at the market price. We did another fundraising a week ago. We did that at the market price.
Yeah.
We raised a little bit over 2.2 million then.
Okay.
So we've got a lot of capital, and we're managing our capital as the business grows in line with the company's beliefs, which are obviously, sort of developed from my own beliefs. So I think the short answer is people need to, as with anything, they need to understand what they're investing in. Yeah. Some people love what we're doing from the website side of things. Some people love our medium to long-term acquisition plans. Other people absolutely love what we're doing on the Bitcoin side of things. So when I invest in something, I look at elements of the business that I like. I rarely like everything that they're doing, and it's probably the same with us. People will see some of what we're doing, and that's why they'll invest in us. But regardless of that, people need to understand that. And, if they've got any questions, they can ask us. We can't answer everything because there's certain rules. But, we're very transparent. We've said this in our announcements as well. We want to bring everyone along for the journey so they can enjoy it as well.
And part of that journey is a 10-year plan, which outlines your organic growth and strategic acquisitions. So could you just elaborate slightly on those growth strategies, and also, how are those going to deliver these consistent returns?
Yeah, so I don't have this as a stat that I can say with 100% confidence, but I'm pretty certain that if you go over the last 5 years or so, we've been the most successful IPO on the London markets. We listed, I intentionally underpriced it because I didn't want to apply any additional value. I wanted the market to value us. Right. I think that's the best way of doing things.
Yeah.
And we've probably gone up in price by like 10x or something like that, as a result of, being honest, transparent, fair, and letting the market do its job at the end of the day. Where do we go from here? Well, you can see from what we did last night, what we did last week, that, there's clearly demand for what we're doing because we're raising at the market price, because we want to look after our existing shareholders as much as we want to grow the business. Where will that growth come from? Well, I think it will come from a combination of the things in our 10-year plan. In the medium to long term, the acquisition side of things, potentially, but certainly in the shorter term, the organic growth that we're getting, and then there will be an element of how well Bitcoin performs. Sure. Personally, I believe it's the best asset the world's ever seen. Lots of other people share that opinion. If that does well, that will do well. But, it's not only about that. It's about how we grow our operating business alongside how we manage our treasury.
To the same degree that MicroStrategy is that balance, would you say?
I would say more so. So, my favorite sector in the world is companies that have got Bitcoin on their balance sheet. Right. I hold 6 or 7 of them at the moment. Yeah. It's a sector that I know in detail. The only rule that you really get in that sector is the smaller the company, the higher the MNAV, which is the correlation between the market cap and the underlying assets that business has got, excluding any operating business. So that's a figure that we all use. And if you look at the 85-90 companies, public companies with Bitcoin on their balance sheet, you'll see the smaller the company as a general rule, the higher the multiple they trade at. So Michael Saylor from MicroStrategy is obviously, you know, the god in our world. You know, he's the pioneer of that particular model. The thing that he's got though is that because he's so big, any capital that he raises, no matter how clever the strategy is, does it make that much difference to give that much additional return? What you've got in the first couple of years of life as a company like this is you've got that uber upside, which is where it gets very, very exciting.
Yeah.
Because if you think about us, for example, we can raise a fairly modest amount of money at hopefully very, very good terms, and we can make a massive difference to how the balance sheet looks. So that's why the smaller the company, the better the premium. The other thing that I've noticed, as we've, you know, obviously become a listed company, is that there's an element of price that gets applied to the team. So if you look at Tyler and myself, I think people, you know, think that we can do what we say we're going to do. We believe we can do what we say we're going to do.
Yeah.
And then you've also got the fact that it's a UK listed company. So there's a slight premium that's probably attached to that.
And which part of the market are you listed on? It's Aquis, isn't it? Yeah.
Yeah. So we when we decided that we'd do this, we looked at the speed and the cost of becoming a listed company. Aquis was cheaper, and Aquis was quicker. Everyone said to me the liquidity isn't very good on Aquis. I disagree with that, because yesterday we traded something like £3.5 million worth of stock.
Yeah. And it's clearly dependent on the company and the idea, because you've grown to be the most liquid company traded on Aquis in a very short time period.
Yeah, well, in fact, roughly speaking, if you look at our company versus every other company on Aquis, we probably trade 8 times the volume of the entire market. So it's pretty significant. You know, as a IG client or any other platform client, you know, do you care what market it's listed on as long as you can trade it? You know, as long as you understand the company and you've got access, it's about the liquidity of a stock. It's not about the market to a degree.
Sure.
That argument becomes different when you get onto much larger institutional investors, sovereign wealth funds, and things like that. But certainly for people like, well, certainly me, and I assume you, you know, it doesn't really matter as long as the platforms support it.
Yeah. And the value creation.
Yeah, exactly.
So, speaking about that then, so how many Bitcoin does the company have in the treasury at the moment then? Are we allowed to discuss that?
Yeah, we would have to refer to the most recent announcement, which was yesterday morning, and it was a fraction under 20.
Right.
You know, versus the cash that we've got at the moment, you know, which, you know, in the majority, almost entirety, will be managed, you know, with the digital asset treasury policy that we've adopted as a business.
Yeah.
On the train on the way to see you today, I was reading some figures, and they were suggesting that we've got enough capital to have somewhere between 80 and 100 Bitcoin on our balance sheet.
Wow.
I don't think I'm allowed to put a figure on that, but I certainly wouldn't disagree with that number. So it's a pretty, you know, we're in a good position.
Yeah. And then obviously strategy has these incredible bond structures with the convertibles. Yeah. Is there a limit to what you can do if you don't have the availability to convertible bonds, or is that a plan in the future as well?
Not really. So in all the different markets in the world, so the States, Japan, France, the UK, you've got kind of the same toolbox in terms of capital strategies. The only one that isn't quite as easy in most other countries other than the US is the ATM model, you know, at the market offering.
Yeah.
But broadly speaking, you've got the same. What I believe, which is what we'll do as a company, is that as you're smaller, you should stick with traditional equity raises.
Yeah.
One of the great things about the UK, which people don't give us enough credit for, is that for smaller companies, it's actually very easy to issue stock, you know, providing you've got demand and you've got someone that wants to buy the stock.
But is that a problem in the dilution of the existing shareholders?
Yeah, so dilution's an interesting thing, you know. So I feel quite strongly that people shouldn't have price dilution, which is why we've always raised albeit on a sample of 2 raises after we've been admitted.
Yeah.
We've always raised at the market price.
Ah, okay.
So if you think about the raise that we did last night, we did it at an in excess of a 50% better price than we did it a week ago. We raised
Higher.
just over 50% more capital than we raised a week ago. So I don't think anyone minds dilution if it's for the business growing. What people don't want, in my opinion, is they don't want dilution where their capital isn't deployed efficiently.
Yeah.
The raise that we did last night, off the top of my head, is probably something like a 7% dilution. But the flip side of that is, yes, you've got 7% less interest in the overall entity.
Yeah.
But the overall entity's got the best part of 3.5 million cash. Not debt, no interest or anything, literally cash.
That was going to be right. So there's no debt in the company.
Correct.
It's all been done through equity financing and then additional raises in the future.
Exactly. So, as we get much, much bigger, when we pass 100, 200, 300 million market cap, maybe we'll explore some debt things.
Okay.
But whilst I'm a very probably adventurous investor in some ways, I'm also very cautious. This is my life's work, this business.
Yeah.
I don't want to do anything whilst I'm very ambitious and keen to get somewhere relatively quickly. I don't want to do anything that would endanger the business. So we'll be very sensible on that side of things.
Sure.
And to be fair, in our industry, people, they offer 0% discount, 0% debt over 5 years and things like that. You wouldn't have to pay any sort of coupon if you know what you're doing in our space anyway.
Now, for the balance, are there any risks outside the price of Bitcoin going down, right, which is obvious? Are there any risks that potential shareholders need to know about?
I think probably the most important thing is when you look at any company is, do you trust the management? Do you believe that they can execute their stated strategy? Do you believe that they're aligned with your interests? Clearly myself and my family are very aligned with the interests of our shareholders. That's probably the biggest one. Underneath that, you've got the other side of things, which is things like I don't know, as an example, not only do you believe them, but have they made the best possible endeavours to ensure that all the sensible things. So, for example, with us, you've got custody arrangements. For example, are those custody arrangements as robust as they should be? I think because of my background, we've addressed the vast majority of these things very, very well. We've got the advantage as well that for anything that's a bit unfamiliar, one of our directors, Tyler, he's been there, seen it, done it on multiple occasions with a very similar sort of a business. So that's probably the biggest risk, as with any company.
Yeah. Andrew, thank you so much for joining us today. It's going to be a really interesting journey to keep our eye on. And any more questions, where can people get in touch with you?
So the best thing to do if you want to find out more about our company is go to our website, www.smarterwebcompany.co.uk. Whenever we put any news out, we put it on our Twitter. You can find the link on, to our X page, which I always call Twitter, at the bottom of the investor relations website. Within the website, there's a dedicated section for investor relations. One other cool thing is, there's an emerging community that is nothing to do with the company.
Right.
Other than they are interested in the company. That's very active on X. So, speak to other people, of course, speak to us and ask us what we're saying, but also speak to other people that are nothing to do with the company and see what they say about us.
Excellent. So the ticker?
SWC, and we're listed on the Aquis Stock Exchange in the UK, available on all the major platforms, especially IG.
That's a great way to finish. Thank you so much for joining us, and I'm really excited to follow the journey.
Thank you.
So welcome back. That was the interview with Andrew Webley. Really interested, isn't it? It's always nice to get into the nitty-gritty, the micro bottom-up of stocks and stories like this, right? Especially here in the UK. Isn't it nice to hear an English accent or a CEO talking about the tech sector and those early early adoptions of those new ideas. So I'm just going to show you a quick valuation chart of the sector. So you see MicroStrategy at the top there, of course. The way to look at this is the name and then how many Bitcoin they've got, the US dollar market cap, the US dollar amount in Bitcoin holdings, and then the market cap, and then the premium to the NAV, right? So you see MicroStrategy there only trades at a 2 times multiple to its NAV. But we're talking about a company that is worth 113 billion US dollars. Then you see Metaplanet. Now, Metaplanet, Andrew mentioned them because the non-executive director of Smarter Web Company is also involved with Metaplanet. And I think that's an important thing that came out of that interview is that you got the guidance from Tyler that has perpetuated Metaplanet to get to where it is, so $2.3 billion. Then you've got all the others. You can see Andrew's point at the start of the interview. The smaller the size of the company, the larger the premium to MNAV it seems to attract, right? In the Rumble in the 20s, there's a couple even in the 60s, 70s there. And yeah, because you've got that small mover advantage, right? Back to the old Lego bricks here, that if you earn the ability to raise capital is all down to the management team finding new pools of liquidity, right? So it hasn't been done here in the UK before. Those sources, those pools of liquidity haven't been tapped. And that's, I think, what the team, why they're coming in to do, shows like ours here, and why Andrew's off to Las Vegas for the Bitcoin conference next week. That's, again, showing new pools of liquidity. Then, of course, what MicroStrategy did was they went into the corporate bond, convertible bond market, which is another source. So it's that's all the sort of positive side of things. But as I say, always we protect our viewers here. So you've got to be aware of the potential volatility and the potential risks of an investment on Aquis at this size. The underlying, obviously, Bitcoin can drop. So yeah, really interesting, but comes with a lot of risk. For goodness sake, do not touch this thing on leverage. Right? It's not even available on the IG platform on leverage, and that's a great thing. It is available on the IG platform in your investment and stocks and shares account. So, with that, that's the end of today's show. Thank you so much for joining us. Please, if you're a new viewer, come back to see us again. Hit that subscribe button. And we shall be back 7:30 a.m. tomorrow. Andrew McKelvey's called it. JD Sports numbers are tomorrow, and we'll look at how the US session goes today. Have a great day, everybody. We'll see you tomorrow.